Hello and welcome back to TradeSmart, where we test objective, rules-based strategies and code the best performing ones into Premium Tradingview Scripts. With these scripts, you have the ability to customize every parameter and connect them to your broker to automate your trading. To get access to these scripts and to all of our optimizations, become one of our supporters on Patreon. Link is down in the description. Today I brought you a new strategy made with one of our Premium Tradingview Scripts and with one of our free indicators for the BTCUSDT 50-minute chart. This strategy is a bit more complex than usual, but as you can see from the backtest results, it has some potential. If you are not into algo trading, don't worry, I will also show you all the indicators needed and how you can trade it manually. Just before we get into the video, don't forget to give us feedback whether you like this strategy or not, with a thumbs up or thumbs down, and any recommendations on what strategy should I test or for what assets and timeframes should I make strategies for are welcomed in the comment section. And now, let's get right into it. For this strategy we will use two different entry signal indicators, a faster reacting one and a slower reacting one, one distance from moving average limiter, one candle height limiter, one stop loss indicator, and one exit signal indicator. Let's add them to the chart. If you've set up the BTCUSDT 50-minute chart, let's open up the Indicators tab. First of all, type in the first entry signal, the Kairi relative index, and add this one to your chart. After that, let's add the slower reacting entry signal, which is going to be the SuperTrend. This one. Next up, the distance from MA filter is a filter that we developed, so for that I will leave a link in the description where you can get access to free. It will be this one. Next up, the candle height limiter. Add this one. And finally the stop loss and take profit placements. For the stop loss, the NNFX ATR. This. And for the take profit, the squeeze momentum. This one. Okay, we have all of the indicators on the chart, but we need to change some settings. So let's go over them one by one. First, the Kairi relative index. For that, change the length to 10, then switch to the style, and change the coloring style to columns. This way it will be easier to see where the entries are. By the way, both the Kairi and the SuperTrend got very good placements in our best entry signal video. The Kairi relative index is the 6th best entry signal indicator we tested, and the SuperTrend is the 1st. If you're interested about that video, I will leave a link in the description or just click on the pop-up in the top right corner. Next, the SuperTrend. Change its period to 65. And the multiplier to 4. After that, let's open up our distance from MA indicator. Here we are going to use the normal limiter type with a 300 length SMMA and with a high limit of 4. This indicator will let you know how far the current price is from a set moving average, in this case the 300 length SMMA, and if it's too far, it is very likely that the price is overextended and it's not a good entry point. Moving on, the candle height in percentage. For this, just go into the Styles tab and untick the first plot. The first plot is responsible for the wicks of the chart, so if you untick it, it will only represent the body of the candle, which we need. With this indicator, we will limit how big the entry signal candle can be. But why do we need that? Well, if a candle is too big at the entry signal, it is very likely that the price will pull back before hitting or take profit, and it will stop us out of the trade. Here you can see a few examples. Finally, the stop loss and take profit. First the stop loss, the NNFX ATR. Here change the X value, which is the ATR period, to 50. Then the SL to 4. Then switch to the Styles tab, untick the buy TP, the sell TP and the main ATR as we won't need them. Then change the two SL line style to step line. This way it will be much easier to place our stop losses. Finally, the squeeze momentum. Here just change the KC length to 85. Then go to the Styles tab and untick the second plot option. Okay, if you follow through, we have our chart correctly set up. So now let's go over the rules for longs and for shorts. Here we have a valid long entry signal. For a valid long entry, first we need to see either a Kairi switch from red to green, something like this, or a SuperTrend buy signal, these ones. If the Kairi switches first, we need to see a SuperTrend buy signal printed in the last 25 candles. For example, here you can see we get a red to green switch from the Kairi relative index. So we need to check if in the last 25 candles a SuperTrend buy signal was printed or not. Let's start counting. 1, 2, 3, 4, 5, 6, 7. And as you can see in the 7th candle, we got a buy signal. So this will be a valid long entry signal. On the other hand, if the SuperTrend is first, we need to see a Kairi red to green switch within the last 10 candles. So for example, here we get a SuperTrend buy signal, and if we count back 10 candles, we need to see a Kairi red to green switch for it to be a valid long entry. So 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. And as you can see, during the last 10 candles, there were no Kairi switches. So this can be an entry signal. The combination of these two entry signals gives very good entry points, but using only one of them will give extremely different results. So make sure you understand this rule and use it correctly. After the first condition is met, we need to see if the second and third conditions are met. The second condition is that the distance from MA indicator's bar needs to be below the 4 level. So the distance from MA indicator is this one. And here you can see those bars that I was talking about. And here is the 4 level. As you can see, these bars are well below the 4 level. So we can move on to the third condition. The third condition says that the candle body height needs to be lower than 0.7%. This is the candle height in percentage indicator. And as you can see, here is the 0.7 level. And on the entry signal candle height was around 0.15. So all of the conditions are met for a valid long entry. The stop loss placement will be at the lower NNFX ATR line, which is a 4 times ATR distance. This will be right here. And the take profit will be when the squeeze momentum turns from green to red. So here on the bottom, you can see the squeeze momentum indicator. And as you can see at the beginning, it's in red, but as the exit rule says, we will only exit if it turns from green to red, not from red to green. That it turns from red to green, and then after from green to red. And as you can see, as of today, it hasn't turned from green to red. So this is a still open position, but as you can see, it probably will be a profitable one. Now let's see the rules for shorts, then I will show you the results for the last 5 years of price data. Here we can see a valid short entry signal. The rules for short entries are very similar to the long ones, just in reverse. So first we need to see either a Kairi switch from red to green, which is this one, or a SuperTrend sell signal, which is this one. If the Kairi is first, we need to see a SuperTrend sell signal printed in the last 25 candles. But as you can see in this case, the SuperTrend gave our entry signal. So, if the SuperTrend is first, we need to see a Kairi green to red switch in the last 10 candles. Let's count back 10 candles and see if there's a Kairi switch from green to red. 1, 2, 3, and as you can see here, we got a Kairi switch from green to red. So this is still a valid short entry. The second condition is that the distance from MA indicator bar needs to be below the 4 level. This is the distance from MA indicator, and on the entry signal we can see that the bar was at around a 2.08 level, which is well below the 4 level. So still all the conditions are met. And finally, the candle body height indicator needs to be lower than 0.7%. This is the candle height indicator, and as you can see on the entry signal, the candle height was around a 0.17%, which is well below the 0.7. So all of the conditions are met for a valid short entry. We can enter at the close of the signal candle or at the open of the next candle. The stop loss will be placed at the upper NNFX ATR line, which is a 4 times ATR distance. Somewhere around here. And we will close the position when either the stop loss gets hit or when the squeeze momentum turns from red to green. As you can see, at the start of the position, the squeeze momentum is in green, but we will only exit when it turns from red to green. So we first wait it to turn to red. Then after a while, it will turn to green right here. Let's mark this point. And as you can see, this was an amazing trade with a 5.65 risk-to-reward ratio. So now you know all the rules for this strategy. I know it's a bit complicated, so if you have any questions, feel free to ask me down in the comment section. And because of its complexity, I would recommend you to use it with our premium scripts, where you only need to set it up once. Then you won't have to spend a minute with monitoring all the indicators and the entry and exit points. And now, let's see the results for the last 5 years of price data. Here are the results for the last 5 years without fees using 1% risk per trade, non-compounding. During this period, this strategy took 952 trades, generated 377% net profit with a 1.867 profit factor and with only 7% maximum drawdown. With a drawdown like that, we can increase our risk, for example, to 2%. But of course, crypto trading has fees and slippage. So now let's apply a realistic 0.05% fee per entry and exit and a 2-tick slippage and see if the strategy is still profitable. Here are the results for the same time interval with fees and slippage included with 1% risk per trade, non-compounding. Now the strategy has 304% net profit with a 1.63 profit factor and a 10% maximum drawdown. The equity curve looks amazing, but as always keep in mind that the possibility of the optimization being overfitted is there as always. So I wouldn't start trading this strategy just yet. We need to monitor its performance on live market data for a few months to be sure that it is not overfitted. Otherwise we can lose our capital very quickly. The final equity curve I want to show you is the compounding version. We will use the same fee rate and 1% risk per trade position sizing, but now with reinvesting the profits. This way, now the strategy made around 1,500% net profit with a 1.5 profit factor and with 21% maximum drawdown, which is just barely outside of my comfort zone. If we enable the BTCUSDT price chart on the equity curve, this strategy's performance is outstanding. The profit with this strategy is almost 5 times higher than with the simple buy and hold approach. But I can't say it enough, be cautious and aware of the overfitting possibility. We are not financial advisors and none of our content is financial advice. If you want to see more highly profitable strategies created with our Premium Tradingview Scripts, check out this playlist. To get access to our best scripts and optimizations, check out our Patreon and become a Smart Trader tier member. As always, thank you all for watching, have an amazing day and see you in the next video.